Trump's executive order to explore creating a digital asset stockpile and draft regulatory framework will bring in trillions. This is where we start getting exciting, guys. The crypto space has matured. There's a greater variety of buyers and more value-oriented investors than ever before. I expect volatility, but I'm not sure I'd bet against crypto in 2026. Usually 2026 would be the bear market year where everything falls to shit and everybody panics and everybody leaves in a huff, right? But I mean, really, it takes some time for all these new onshoring methods to come in uh, for all these new users. And I don't know that them only having 1 year crack at it is going to be enough to get them to bail, right? So bankruptcies from the likes of FTX, Three Arrows Capitals, Genesis, BlockFi, and Celsius contributed to the 2022 market fall, while the SEC's initial coin offering crackdown and Mt. Gox's collapse were the two of the main catalysts behind the pullbacks at earlier stages. So those things are not in front of us anymore, right? So Wall Street banks can now custody crypto far more easily after the SEC canceled its Staff Accounting Bulletin 121 rule, which asks financial firms holding crypto to record them as liabilities on their balance sheets instead of this isn't a liability for us. We're holding it on behalf of clients. This whole thing was a thing by the Biden administration to handicap or kneecap crypto. So Hugin integrated Bitwise's $200,000 price prediction by the end of 2025, which he said it could be obtained with or without a strategic Bitcoin reserve, which sounds fantastic. Now, let's move on. Part of the idea of some of these legal changes have real implications, like real positive implications for the industry. Even though they're just stupid accounting rules, they make huge differences. So let's dive into this. Tesla reports a $600 million Bitcoin gain in Q4 using the new accounting rule. So let's dive into this. Tesla reported a $600 million gain from its Bitcoin holdings in the fourth quarter of 2024, thanks to a new accounting rule that allows companies to record the market value of the crypto on their books. This is how dumb this was. Let me get to this in a second. The Q4 2024 results released on January 29th show the company valued its Bitcoin stash at just over $1 billion, up from the $184 million it logged through previous quarters. So think about that. Even though the price of Bitcoin had been moving all over the place, because of the way that these stupid accounting laws were, a company had to keep the lowest cost it had been over the time that they held Bitcoin on the books. So let's say you bought Bitcoin, it dropped, in half, and then it went up 10x. On your accounting for public investors, you still had to use the cost of when it was at its lowest price, even though the actual value of it is up 10x. So stupid. Under 2023 Financial Accounting Standards Board rule came into effect in mid-December, corporate holders can now use the estimated market value of the digital assets in their balance sheets. It's so dumb that this was ever even an option. The FASB sets accounting and reporting standards for the U.S. Generally Accepted Accounting Principles, GAAP. Previously, the value of crypto firms' corporate holdings for crypto decreased on the books if they lost value in an accounting period, which could make a company's assets appear to be worth less than their market value. So dumb. Overall, Tesla reported a GAAP income of $2.3 billion in the fourth quarter, boosted by the $600 million of its Bitcoin holdings. So that's wild. Just this rule alone, I can't remember if they did it or not, but that could put MicroStrategy in like the top, 100 companies. If they said, hey, you're only counting our Bitcoin as being worth X, but now it's worth, 20X in value. So, that's really, really a big deal. So all these books, all these accounting rules, all these things are really working in our favor because a lot of companies didn't hold Bitcoin on the books because if Bitcoin went through one of its, 4-year bear markets and the value of their Bitcoin went down by 80% in billions of dollars, a lot of companies necessarily didn't even care about that if they're planning on holding it long term. They cared about having to suddenly show public investors the lowest value of that for their stock price, right? Whereas now they don't have to do that. So suddenly it just became a lot more interesting for companies to be able to hold Bitcoin and other crypto assets on their books. So let's talk about Solana continuing to just devour Ethereum. Ethereum is just getting its ass kicked over and over, and they're just having a hard time in this. So Solana is, quote, drinking Ethereum's milkshake as the decentralized exchange market shares rise. So Solana has captured around half, sometimes nearly all, of the decentralized exchange volume in the last 5 weeks, extending its dominance over Ethereum. Solana has surged to dominate nearly half the DEX market, largely driven by the meme coin launchpad Pump.Fun, which has seen more volume than the Ethereum network in the recent weeks. That's crazy. Think about that. Pump.Fun, the stupid meme coin factory site that allows you to quickly go in and create a meme coin with like no cost and launch it into the world, is doing more decentralized trading volume than all of Ethereum. That's crazy. So a subset of Solana, just one site on Solana, one smart contract on Solana is doing more than all of ETH. That's pretty wild. So let's go. Solana blows every other chain out of the park by almost all measures in terms of DEX volume, citing transaction fees, transaction count, and active wallet addresses and active DEX users. Solana is truly the retail chain. Let's put a pin in that because we're going to come back to this. The Solana native DEX Jupiter, which we have as a Moonstream coin pick, Jupe, JUP, that's a token that we invested in, has accounted for nearly 70% of Solana's DEX volume. That's why I wanted to invest in this thing. And OKX praised the platform for optimizing slippage, providing accurate real-time pricing data, and minimizing platform risks. That's a big deal. So, of course, a lot of this volume came from the stupid Trump meme coin and Melania meme coin right during the inauguration, which is ridiculous. However, Ethereum and its layer 2s still dominate weekly volume per address and average trade size, suggesting that whales and companies, frankly, are more active on Ethereum. So Ethereum is like the business chain or the big chain for big deal whales. Solana, like they said, is a retail chain for retail investors. So, you know, that's something worth paying attention to, right? So Solana's having its day in the sun because meme coins are all the rage right now. And I've constantly talked about the fact that Solana needs to make sure that it's not just the meme coin chain, because meme coins are not going to stick around long term. And once that thing turns around, just like NFTs, they're just going to get destroyed. And if that's all that Solana has going for it, whereas Ethereum is actually doing, even though they don't have as much volume, because it's just a bunch of retail gamblers buying meme coins, that's what's driving all the DEX volume. Whereas Ethereum is actually building real financial, decentralized finance apps that do real volume and real banking. So you can like kind of not have a bank account and actually still use Ethereum, whereas Solana is becoming a dog coin chain. Anyway, OKX added that Ethereum also leads in liquidity pool quality due to the size of its total value locked, which is massively larger. So, for example, Ethereum has tokenized 82% of more than $5 billion worth of real world assets, whereas Solana only accounts for 2.5. So Ethereum massively outperforms RWAs versus Solana only doing 2.5%. So that could be something that Solana has, if they got serious about this, and right now it's just the market doing what the market's doing, but right now everybody wants to gamble on dog tokens. But Solana could go and try to attack the real world asset industry because Ethereum's winning that big time. So OKX added that Ethereum remains the bedrock for decentralized finance innovation and that some of its layer 2s are beginning to compete with Solana's low fees and high speed transaction capabilities. So really that's the only way I think Ethereum continues and like starts to claw back that market is they don't really need to care about meme coins because those are going to go away, but they need to really do more with layer 2s instead of just using Solana base chain, which is just as fast as Ethereum layer 2s. So Bitcoin, this is from yesterday, rallies to 104.7. Now we're higher than that after the FOMC nothing burger, which, I love that term, lines up with market expectations. So basically the Fed meeting was kind of a no big deal. Things are roughly where we thought they'd be. Although Jerome Powell and policy makers conceded that inflation remains somewhat elevated, an understatement if I've ever heard one, because it's 50% higher than their target, the central bank chose to take a wait and see approach, leaving all options open. The comments, the bulk of the statements aligned with expectations of market participants. There was no big ugly surprises that dropped markets. Economist and popular trader Alex Kruger describes the press conference as good, citing Powell's optimism on both policy and the economy. The FOMC statement has removed mention of progress towards inflation, generating a bear trap right before the conference. Bit of a nothing burger FOMC conference, nothing dovish, nothing hawkish, walking a very diplomatic line. And I think the market was expecting Fed to be more vocal, or Powell to be more vocal about Fed independence, because Trump has been saying lower the interest rate. He clarified there was nothing hawkish about removing the written language about inflation making progress. He didn't really give anything for bears, and the bulls took this as an opportunity to aggressively squeeze shorts. Now, this is something I did not have on my bingo card for 2025. Could Elon Musk start moving some of the Doge initiative to make more corporate or more government transparency on the just utter disgusting amount of waste the US government does with spending and put it on a blockchain to have it completely transparent? Because then you have actual accountability. This is pretty wild. Is Elon Musk plotting the mother of all blockchains? Elon Musk is said to believe that blockchain technology can boost government efficiency. Last week, he reportedly met with representatives of various public blockchains to explore the use of distributed digital ledgers in this new Department of Government Efficiency, DOGE. though nothing has been announced publicly. There are good reasons to believe that public, tamper-free digital ledgers could help track government spending, secure data, and perhaps even make payments. But technical, political, and educational obstacles surely remain. This would take some time. This is not going to happen anytime soon. But it's amazing that we're actually talking about it, right? The right chain could certainly help streamline internal networks, revolutionize the government contracting process, and open a pathway to improved international payments and trade finance without going down the route of a central bank digital currency. The reason I'm bringing this up for us is that we have positions in what could be some of these chains, probably some of the top chains, Ethereum, Solana, so on and so forth. Um, I cannot even fathom what would happen if the US government said, hey, we're going to start using Solana to start tracking all of our government spending. Good Lord, the pump on the Solana chain and price would just go stratospheric. Or if it happened with Ethereum, I don't see it happening with something like Ripple, but then again, I'm biased and I just hate Ripple. So anyway, he added that the efficiency gains could be significant because new processes and structures could be built upon the technology, quote, allowing for new savings down the line that aren't really possible with current database structures. He said that it should not only save money, but would reduce rumors, speculation, conspiracy theories, and untruths while restoring public confidence and reducing corruption. So basically, you can't screw with a blockchain. You can't hide that. You can't, it's all out there. Everybody runs a copy of the blockchain. Everybody has a copy of the books. So if you make it totally transparent, that's a great thing.